Indeed, lots of lessons to learn, not only for the institutional investors, but also BEE investors, because Abil's downward spiral will have a significant impact on BEE investors. You might know that they have their two platforms, Umhlaba and Hlumisa, which trade over the counter. Well, I'm joined by Craig Gradidge. He's the co-founder of Gradidge-Mahura Investments. He's on the line now to give us more insight. Craig, good to have you on as always as our BEE expert. It's interesting to note that the demise and the drop that we've seen of the Abil share price has obviously impacted on Umhlaba and Hlumisa. Is this a surprise to you, given the fact that we always see a lack of liquidity in these BEE shares?
Well, look, I suppose the surprise is just the demise of African Bank Limited, and the value of Umhlaba and Hlumisa was in their African Bank exposure, or the exposure to Abil shares. Obviously, what's happened now is those shares are practically worthless, but Umhlaba and Hlumisa are having to carry some significant debt on their balance sheets now.
It's interesting you mention that debt, because what does this mean going forward? Abil can't necessarily do a rights issue with its share price at 50 cents at the moment. The BEE investors themselves, before they can get any kind of value from Abil, will obviously have to settle their own debt regarding the preference shares that they have. Is this a difficult one for those particular two schemes?
No, it's a very difficult situation. For these schemes are worthless at the moment. We need to see how this thing plays out. It's not the end as yet. We need to see whether the institutional shareholders actually, come to the party and provide some sort of recapitalization to Abil. But there's about 65 million debt on Umhlaba, and 112 million on Umhlaba and about 65 on Hlumisa. And the shares are worth about 20 million for Umhlaba. So a significant hole that needs to be filled. We will need to see how this plays out. I'm not too sure whether some of those debt governance have kicked in yet. We haven't had any communication from the directors of either Umhlaba or Hlumisa at this stage.
It almost sounds as though this is a double whammy for this particular BEE platform, because they're being hit by an investigation from the FSB on the over-the-counter platform, and now issues with Abil as a going concern. So tough times ahead for that management, no doubt.
Indeed. These two deals were they had both settled debt in 2012. And, the management and directors of the schemes both decided to gear up the business and increase the exposure to Abil shares at what we now know was the top of the market. So they were, these were both fairly sound deals 2 years ago with no debt. And, now the new debt has came at a time when the shares were at their highest price, and so the deal is now worthless. So directors will have some answering to do to shareholders. And we will see what the investigations bring up.
Craig, just in closing, for shareholders in those two, Umhlaba and Hlumisa, that you made mention of, what do they do now?
Yeah, look, I mean, there aren't any buyers on either scheme. I think there's a cheeky bid for 1 cent on Umhlaba, and I haven't seen Hlumisa. So at this stage, you've really just you've got to wait and see what the large shareholders of African Bank decide. But for all intents and purposes, those things are worthless at the moment. So, even if you're able to exit, you're probably going to exit at 1 cent. The upside, if it depends on what the institutional shareholders decide, and if there is some form of recovery that comes from this. I would rather just sit. I'm exposed, and I'm sitting and holding and praying.
Sure. Deep waters you are sitting in. But thank you so much to Craig Gradidge. He's the co-founder of Gradidge-Mahura Investments.